Hello, it's Tuesday the 16th, I'm FX Blue and this is CurrencyTransfer.com's market update. And the headlines today are that sterling is open to volatility risk, the dollar is lower on risk aversion, and Italy delivers its budget to Brussels. So sterling was little changed on the day yesterday, despite a speech from Theresa May on the state of the Brexit negotiations. 18 months of Brexit negotiations seem to have been distilled down to whether or not they can reach agreement over the Irish border. As the EU Brexit summit looms large, we've got 48 hours left for them to determine the wording of both the border agreement and the backstop, unless, of course, they decide to defer the issue until after the summit. It's this uncertainty that is currently keeping sterling in a very narrow trading range. The market is largely unsure as to whether we'll see 130 to the downside or 133 to the upside first, but whatever direction, sterling is likely to be volatile. Yesterday, US retail sales fell by 0.1% for September. That was against a forecast of a 0.3% gain. The dollar index fell to a low of 94.95 yesterday. And it seems that the market is largely ignoring the risk of the midterm elections for now. Trump has had a fairly easy 2 years of it, with both houses of Congress controlled by the Republicans. But the real potential for change means that this is likely to become the focus of the market, and certainly a story that will follow for the next few weeks. Tomorrow we've got the FOMC minutes, which may have a short-term effect on the market as we see the level of support that Chairman Powell has from his colleagues on the committee. And Italy delivered their budget to Brussels yesterday. The deficit did remain at 2.4%, with the promise of minor improvements over the next 3 years. The new government have remained committed to their election promises, and it's about time that they start delivering on these now. So Brussels will be well advised to sit up and listen, or certainly take notice, as this could be the start of a big wedge being driven between Italy and the rest of the EU. The euro itself remains widely under pressure, but benefited by a weaker dollar yesterday, rising to a high of 116.05. Have a great day. I'll see you tomorrow.